Welcome to our strategic deep dive into Bajaj Auto Ltd. As a cornerstone of the Indian automotive industry and the world's third-largest manufacturer of motorcycles, Bajaj Auto stands at a critical juncture. Currently trading under the ticker NSE Bajaj Auto, the company has evolved from a domestic scooter giant into a diversified global mobility leader. With a footprint spanning over 70 countries, Bajaj is no longer just playing the volume game. It is pivotally shifting toward premiumization and electrification. Today, we will analyze the core drivers that will shape its stock performance and investment profile heading into 2026. Whether you are a long-term value investor or a strategic decision-maker, understanding Bajaj's multi-pronged approach to the evolving transport landscape is essential for your portfolio's alpha generation.
Financial discipline is the hallmark of Bajaj Auto. In recent quarters, the company has demonstrated remarkable resilience despite global supply chain headwinds. We are seeing a robust revenue CAGR of 15%, driven by a better product mix. Most impressively, Bajaj maintains one of the highest EBITDA margins in the industry, consistently hovering around the 19% mark. This profitability is underpinned by a lean manufacturing model and significant cost optimization measures. As we look toward 2026, the company's strong cash flow generation provides a significant buffer for R&D in the electric vehicle space, while maintaining a debt-free balance sheet, making it a defensive yet growth-oriented pick in the volatile auto sector. The electric vehicle revolution is no longer a peripheral threat. It is a core growth engine for Bajaj. The revival of the iconic Chetak brand as an electric scooter has been a masterstroke. Bajaj is aggressively expanding its EV distribution network across India and international markets. The company is targeting a monthly production run rate of 20,000 units by FY25 to capture a larger slice of the burgeoning green mobility market. Beyond hardware, Bajaj is investing in the charging infrastructure and battery management software. This transition is crucial for the 2026 outlook, as regulatory shifts and consumer preferences move away from internal combustion engines, positioning Bajaj as a frontrunner in the sustainable transport transition.
While many manufacturers are tethered to domestic demand, Bajaj Auto is a true multinational. Exports account for approximately 40% of its total revenue, providing a natural hedge against localized economic downturns. Bajaj holds the number 1 or number 2 position in several markets across Africa, Latin America, and Southeast Asia. The Boxer brand remains a dominant force in the international commuter segment. Looking toward 2026, the company is focusing on high-growth regions like Brazil and enhancing its presence in Western markets. The ability to earn in US dollars while manufacturing in India remains a significant competitive advantage for its bottom line, especially during periods of currency volatility. A key pillar of the 2026 growth thesis is the premiumization of the portfolio. The strategic partnership with Triumph Motorcycles has fundamentally changed Bajaj's profile in the mid-capacity segment. By manufacturing the Triumph Speed 400 and Scrambler 400X, Bajaj is tapping into the high-margin enthusiast market. This collaboration allows Bajaj to leverage British engineering and brand prestige while utilizing its world-class manufacturing scale. This move directly challenges incumbents and expands the addressable market for the company. As production ramps up to meet global demand, we expect this segment to contribute significantly to margin expansion and brand equity, further decoupling the stock from low-margin commuter segments. For investors, Bajaj Auto is a paragon of shareholder friendliness. The company maintains a robust dividend payout policy, often reaching a 90% payout ratio. This commitment to returning capital is backed by a consistent history of share buybacks, which support the stock price and improve earnings per share. In an era where tech companies often burn cash, Bajaj's ability to generate excess liquidity and distribute it to shareholders makes it an attractive core holding for income-focused and institutional investors alike. As we look at the 2026 horizon, the company's strong free cash flow suggests that these generous capital allocation policies are likely to continue, providing a solid floor for the stock's valuation. Quantitative analysis suggests a positive trajectory for Bajaj Auto through 2026. Our base case scenario targets a price range of 11,500 rupees to 13,000 rupees, assuming steady recovery in export markets and a successful scale-up of the EV and Triumph portfolios. In a bull case, where EV adoption exceeds expectations and rural domestic demand spikes, we could see levels surpassing 14,500 rupees. Conversely, a bear case would involve prolonged geopolitical tension affecting exports or a significant delay in the electric transition, potentially keeping the stock in the 9,000 rupee range. However, given the current PE multiples and growth projections, the risk-reward profile appears skewed to the upside, particularly for those with a 2-year holding period. In conclusion, Bajaj Auto Ltd represents a sophisticated play on the future of global mobility. Its three-pronged strategy, dominating the domestic market, leading the export segment, and aggressively pivoting to premium and electric vehicles, creates a resilient investment thesis. With industry-leading margins, a debt-free balance sheet, and a clear roadmap for 2026, the company is well-positioned to navigate the transition from traditional internal combustion engines to sustainable energy. For decision-makers, the recommendation is a strategic accumulate on dips. Bajaj is not just a legacy automaker, it is a high-efficiency capital compounder. As always, ensure this fits your risk profile and consult with your financial advisor before making any significant allocations.